first, Silvergate was just like any other regional bank, and its push into crypto, it looked like a huge success. By creating a payment rail called the Silvergate Exchange Network, it allowed for almost instant dollar and euro transfers among the biggest crypto players. And the so-called Send network helped facilitate trading across major exchanges, and hundreds of billions were transferred yearly. Silvergate also started offering everything from Bitcoin-backed loans to high flyers like MicroStrategy, while being a banking partner to firms like Coinbase and stablecoin issuer Circle, both of which have reduced exposure to Silvergate as it has faced trouble in recent months. The problem now is twofold. One is a matter of its own finances facing pressure as crypto slumped. Silvergate built a critical thread through the crypto industry through the Send network and saw its shares shoot up to $222 at its peak. But its stock was already under some pressure by October of 2022 as transfers slowed. And the much bigger issue then became FTX, a significant client. So another problem for the bank became a regulatory one. While Silvergate initially said that FTX accounted for less than 10% of the firm's deposit base, regulators, lawmakers, short sellers, they all soon began circling. Bloomberg has reported that Silvergate is allegedly the firm that opened accounts for FTX founder Sam Bankman-Fried under a different name, which helped him avoid stricter due diligence. The bank has not been accused of wrongdoing, but it is the subject of an investigation by the U.S. Justice Department. And what's more is that Silvergate began to hit more dire financial troubles by the end of last year. It had to sell securities at a loss and took an impairment charge tied to $1.7 billion worth of securities, while also reporting a $1 billion loss in the fourth quarter. It suspended a preferred dividend payment in January, and then by March, it raised a much bigger warning that it had to delay its annual filing as it analyzes those regulatory inquiries and investigations. It had said that portfolio losses and other issues could impede the ability to operate as a going concern. You can see just how much the bank's deposit base had taken a hit around the time that FTX issues came to surface, and the pressure has only mounted since then. That latest warning had sent the stock into a 60% spiral, hitting almost $5 a share. And the stock has only sold off further as companies like Coinbase, Mike Novogratz's Galaxy Digital, Circle, and stablecoin issuer Paxos all announced a pullback from Silvergate. Silvergate now is in search of a path forward. But remember, it's also a federally insured depository institution, and that it had taken advances from the Federal Home Loan Bank, underscoring crypto's potential ties to the U.S. banking system. And that has gotten regulators so very concerned. It's a watchdog's worst fear, and if things keep on going south, the banking system in the United States may close off to more crypto more drastically.